Just weeks after it emerged that the Kenya Revenue Authority (KRA) missed its revenue target for the first quarter of the current financial year by 79 billion shillings, the taxman now warns to net persons operating online-based hospitality rental units, popularly known as Airbnb, to ramp up collections. It has emerged that the authority is seeking information targeting persons running Airbnb for tax compliance purposes. Let's now take a look at the latest efforts by KRA to enhance collections. If you have a housing unit and use the same for Airbnb as a source of income, the Kenya Revenue Authority has you on its radar. It has emerged that the taxman is seeking to engage in an information exchange exercise with his Irish counterpart to help net those operators falling short of compliance. This comes weeks after the leadership of the tourism fund indicated that out of about 40,000 listed Airbnb hosts in Kenya, only about 400 have registered with the fund, implying majority are not compliant with the 2% tourism levy. This is part of KRA's efforts to boost collections from rental income tax, which have included mapping of residential and commercial units across the country in a bid to seal leakages. Still on efforts to widen the reach of the tax net, KRA has reminded businesses operating in the country that effective the 1st of January 2024, only invoices generated through the electronic tax invoice management system will be accepted for computation of tax liability. This follows the Finance Act 2023's amendment to Section 32A of the Tax Procedures Act of 2015, providing that any person running a business will be required to generate e-TIMS compliant invoices and receipts if their expenses are to qualify as being tax deductible. The measure is especially targeted at netting the vast informal segment of Kenya's economy, which relies on cash-based transactions for its day-to-day operations. The National Treasury has estimated the informal sector taxable base in Kenya at 2.8 trillion shillings. Failure to comply with the provisions of electronic tax invoices will see a taxpayer slapped with a penalty that is equivalent to twice the tax due.